Welcome back. I'm Pratap here. Today is the 7th May 2024. In this video, let us analyze Bank Nifty, which is continuation to the previous detailed analysis. So this is going to be a short video, and we have seen only changes in the 5 minutes time frame, except that we haven't seen any changes. So before we get into this analysis, a small announcement please. If this is your first visit to our channel, please understand we are providing complete free training on supply demand zone price action. So all the training videos are available at our NeoStock YouTube channel. So please in the NeoStock YouTube channel, click on this community tab. Then you can find this post. This post is having a link that will take you to all the training videos. Just click on this link, then you will get into the playlist Supply Demand Zone Price Action course. Scroll down to the bottom of this page. Here, starting from lesson 1.1, all the training lessons are available in an order. So please go through all these lessons one by one and strengthen your skills related to Supply Demand Zone Price Action. I have also provided the link to our Telegram channel in this YouTube video description. Please join in that channel. It will be helpful to you. Each time when we release a new YouTube video, we'll provide an update in that channel. Now let's get into the Bank Nifty analysis. We haven't seen much changes based on our yesterday's price action. You have already experienced yesterday. We got couple of trades from this 5 minutes high liquidity supply zone and reached the 15 minutes target zone in both these trades. But if you look into yesterday's price action, only the 5 minute supply demand zone chain, we have seen few zones are created. We have couple of supply zones are created yesterday 6th. This is the one supply zone and this is another supply zone created. Both these supply zones are normal zones, so you please draw these zones in your chart. I'm mainly focusing only high liquidity zones, so just to identify the support and resistance levels. Here we have a low priority high liquidity demand zone, already tested once, and 5 times prices entered into the zone and came out of the zone, the rejections. So let us focus only on this zone, except that remaining zones what we have drawn in the previous detailed analysis video, the same zones are applicable. So this is created yesterday at 14:35. After that, one base candle. So yesterday 14:35. So this is the one. We have a rally, base, rally. But remember, this is a low priority zone, low priority, high liquidity zone. It's not that low priority zone, maybe that is a wrong word. Among high liquidity zones, this is the low priority, high liquidity zone category. I already explained all these high liquidity zone categories in our lesson 21. So high liquidity demand zone. Maybe prices may get some resistance. The point you need to understand, market always moves in favor of the trend. But there are certain levels, trend changes will take place. Those areas, if we take any trades, definitely we get a hit. Our stop loss will be triggered. And it is impossible to predict which level trend changes will take place. There are times you can predict based on the high liquidity zones, but that is at some extent, but not completely 100% accurate way you cannot predict. But some extent they will prevent trend changes, high liquidity zones. But this is the low priority. We never know how strong it is. We never know how strong it will withstand against the trend, because at this point of time the trend is downtrend, because we are planning our trades on 5 minutes time frame. For 5 minutes time frame, always we look trend one time frame higher. So what is one time frame higher? That is 15 minutes zone. So 15 minutes trend is still downtrend. And our LTF, that means 5 minutes trend is only sideways. But only danger here is HTF trend is uptrend. It is a little concern for us. If HTF trend is sideways, definitely we can plan for bearish trade setups. For bearish trade setup, HTF trend should be either sideways or downtrend. But this is uptrend. And this is preventing our plans for making bearish trade setups. But if you look for the core strategy point of view, in core strategy they don't bother about the higher time frame trend. But bearish trade setup, higher time frame trend also matters a lot. So that is the reason why we should be very careful. Still you can plan the bearish trade setups for intraday related trades, but you should be a little bit careful, because you should not forget your 75 minutes trend is uptrend. If prices are reaching 75 minutes demand zones, probably there onwards don't plan for your downtrends. As long as prices does not reach 75 minutes zone, probably you can continue with your bearish trade setups. Stop planning your bearish trade setups once prices reaches to the 75 minute zone, because 75 minute zone is having a uptrend. So this is the only one thing we have drawn. Probably at some extent we may get some resistance. Who knows, with a gap down this might be violated. That possibility is also there. But how to plan what could be our trade setups? So based on the 15 minutes time frame, you can plan your trade setups. Why? Because 15 minutes trend is downtrend. So you can plan for bearish trade setup. You already learned trend is your friend. So you need to plan according to the trend until the trend changes. So when trend change will take place, if there is a rally based drop, 15 minutes zone, supply zone. If this 15 minute supply zone is violated, let me draw. This is a 15 minutes supply zone. And you have one more 15 minute supply zone. And both these zones are LOTL zones. Why LOTL? Both are very close. The distance is very, very small, negligible. If the distance between these zones are negligible, you can treat them as LOTL. If it is LOTL, when this zone is violated, upper zone, then only trend will be changed. Because we are combining both the zones together. That way you can plan. If this upper zone is violated, but see here, this upper zone rally based drop is having confluence with 5 minutes high liquidity supply zone. This is the one gave us 2 trades yesterday. And if you look into the 5 minutes, here again you have a rally, 2 base candles and drop. Who created this zone? This 5 minutes high liquidity supply zone. And also you should not forget, this 5 minutes high liquidity supply zone is responsible for the creation of this 15 minute zone. Let me go to the 15 minute zone. We have a rally based drop, this 15 minute zone creation is made by this 5 minutes high liquidity supply zone. Yesterday only, in yesterday evening high liquidity zone analysis video, I had talked about this particular scenario. If a lower time frame zone is responsible for the creation of a higher time frame zone, then the lower time frame zone is having a lot of institutional pending orders. So possibility is there. Not 100%, at least we can say 82 or more than 80% scenarios. Excuse me. So more than 80% scenarios, we can believe this zone is having a very strong order flow. If that is the case, it may give us one more short trade if prices are entering into this area. Even before entering into these areas, maybe if trend is very strictly following, probably one of these, maybe the first 15-minute zone may give you a trading opportunity. It may give you a trading opportunity. This zone may be drop, base, drop, that way you can trade. Or maybe rally 1, 2, 3, 4, 5 base candles drop, that way also you can. Because it is LOTL zone, this zone might be violated and the prices may pick up the orders, rally 2 base candles and drop, or maybe from this edge of this 5 minutes high liquidity supply zone, it will touch and then again it will come down. Like what happened yesterday, second trade, see here prices just touched and came down. The same thing might happen today also. That possibility is also there. But this 5-minute zone may give sometimes it may resist, not letting the prices go down easily. That possibility is there, but it is a low priority, high liquidity zone. Definitely this is not the place for planning the trades. The reason is we are against to the trend. You cannot go for long trades against to the trend. Once 15 minutes trend is changed, then you can plan for long trades. So this could be the way you can plan your trade setups in today's. But remember, now you might be getting a fair idea. Here we have 15-minute zones. If they are violated, our trend will be changed. Then above we have one more 15 minutes high liquidity supply zone. If this 15 minutes high liquidity supply zone is violated, trend will be changed to uptrend, the 15 minutes trend. So those points you have to plan. Based on that, you have to plan your bull trades or bear trades. So this is how you can plan your trade setups now. Hope this information will be useful to you. Let us all meet again in our next video. Thank you.